Good morning. Thanks for tuning in. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Vakil. Let's take a look at the headlines. Indian markets are off to a steady start on the weekly options expiry day. The Nifty is trading near the 10,900 mark. Metal stocks leading the gains. LIC Housing Finance and MCX are seeing surge in open interest with fresh short positions. And ONGC is among the top gainer on the Nifty after it clarified that the offshore crude supply has not been impacted despite the fire at its Navi Mumbai plant. And auto ancillaries like Bharat Forge, RK Forgings and GNA Axles are trading with gains after Class 8 truck orders in North America went up 6% compared to the last month.
All right, those are the top headlines for you at this hour. Let's also tell you what's happening with the markets. We're off to a positive start owing to the global optimism that we've got. But let's see if we can maintain these gains that we are seeing, considering yesterday's last hour rally was owing to short covering. And also today being the weekly options expiry day, you can expect a bit of volatility in the second half of the session. So as we speak, Nifty is up about 63 points in trade, trading above the mark of 10,900. Bank Nifty just about flattish in today's trading session. Sensex up about 134 points. Quickly pull up the broader markets as well. The market breadth today has been on the positive side. So both mid-cap as well as the small-cap indices are registering gains, and the advance decline ratio is firmly in favor of the advances as we speak. And also with markets moving higher, you've got the India Volatility Index that's cooled off a bit. Yesterday it was down about 4.5%, and today India VIX is off about 3%. So from that level of 18 day before yesterday, it's come down to 16.6. Very quickly then, what sort of levels can you expect today? If you look at the maximum open interest for today's expiry, it is at the 11,000 call, and on the put side now, even the 10,900 strike has seen OI addition of 10 lakhs. So that and the 10,800, both these strikes are sitting with good amount of open interest, particularly today, writing seen at 11,000 call, and on the put side, the 10,008 as well as the 10,850 strikes have added between 11 to 11 lakh shares. So going by the premium, I think the broader range still remains 10,800 on the downside to 11,000 on the upside. But let's see if the expiry can actually take place and we can close above the 10,900 mark. That will be watched out in today's session, Agam.
That's right. Let's talk about stocks, which are also in focus in today's day of trade based on a surge in open interest. And I'm sure there will be some amount of recovery in a whole host of handful of these companies. So we do have an increase in open interest for, well, many of these stocks, and that should come up for you on screen, or maybe not actually. Let's just talk about those stocks which are looking at a decline in open interest. And all right, so well, maybe we can talk about a few Nifty gainers in today's day of trade. Of course, if we can also have the Nifty gainers, those which are advancing and keeping these indices high. We have ONGC, NTPC, and Indian Oil Corp. Do remember, we have also some news as far as your OMCs are concerned, so they remain in focus. And of course, considering the fact that we have mid-cap and small-cap indices advancing, okay, so we have the gainers in open interest. We have LIC Housing Finance, which is actually looking at a decline of around 5.5%, and keep watchable considering there's been so much movement in this one. There's 20% increase in open interest, and of course that's your list of stocks which are seeing a decline. Some amount of short covering, but not too much to speak for otherwise, Navneet.
All right, and on the show today we will be discussing stocks like ONGC. As Agam highlighted, there are a lot of PSU banks which are going up, be it ONGC or even the oil marketing companies. That in fact is one of the top F&O gainers for the day. But if you look at this stock, technically it's been trading below all its key moving averages. LIC Housing has been weak, not just today. For the last 3 sessions, it's been giving you negative returns, and also we have seen fresh shorting in the opening session for this stock. And MCX, which is down nearly 14% for this week, it has also slipped below its 50-day moving average. Remember, until last week it touched its 52-week high, and of course because of that news regarding whistleblower writing a letter to SEBI, and there were some concerns highlighted in that, though the management has clearly denied all those allegations. But this morning, Agam, we are seeing fresh shorting coming back into MCX.
Yeah, well, it's time to get in our experts for today. But before that, here's a reminder. If you have any queries regarding futures and options, you can call us on 022-454-04141, or of course write to us on Twitter, Facebook, and YouTube with the AskBQ hashtag. We have today Ashish Chaturmohta of Sanctum Wealth and Kunal Shah of Indiabulls Ventures joining us on the show. Good morning to both of you, and thanks for taking the time out. Ashish, we were just talking about the fact that a lot of these traders are becoming a bit tired of the markets. How are you reading into things right now?
Good morning, Agam. So I think, yes, but there is a kind of nervousness being witnessed among the traders, even the investor community. Of late, in terms of index, I think there is a sideways trend which is happening for last, at least last, 2-3 weeks time frame. But if you look at the chart pattern, it is forming an inverted head and shoulder formation on the daily chart. Now, what is inverted head and shoulder? It's basically a bullish pattern formation.
Yeah.
And the sense is that it is seeing a lot of consolidation in a range between 10,800 to 10,950 area. Now, if you look at options data, a lot of put writing is being witnessed at 10,800 area, and continuously we are somehow managing to sustain above this 10,800 area. So considering this two data, I think there is a strong possibility Nifty might see a good 150 to 200 points rally from current levels. So I think at this point of time I would be on the long side of the market, and I think if I have to take a trade, 10,880 would be my trading stop loss for going long into Nifty, which is today's low in Nifty futures.
Right.
That's the Nifty futures level which I am recommending. On upside, I'm expecting index to hit 11,000 kind of zone in next 1 or 2 trading sessions. But looking into this pattern, there is a strong possibility we might eventually test see a up move towards 11,150 to 200 levels also in next couple of few trading sessions.
Okay.
Okay, so Ashish is expecting some bit of recovery to come by, and he's also suggesting if you are initiating any long position, place a stop loss at 10,850. Hi Kunal, good morning to you. How are you viewing the trade this morning, considering today is the day for the weekly options expiry? Would you recommend any option strategy either on Nifty or on Bank Nifty?
Good morning, Navneet and Agam. I think yes, definitely the market is likely to poise on the upside. Some interesting data points to share on the Nifty index as well as on the FI index flow. Voice chala gaya.
Kunal, we hear you. Please go on.
Yeah, so the thing is, we are seeing some kind of positive data even on the FI index long short ratio. Now this is an interesting ratio at the current levels. It is currently trading at the levels of 0.27. Basically this means the number of contracts FIs are short on the index compared to the number of lots the FIs are long on the index. So overall this ratio always trades around the levels of 0.921, which is a fair value, but currently it is trading at 0.27. If you go historically 5 to 6 years down the line data, you will see whenever the ratio is below the level of 0.3, this sees that within the next 10 days Nifty sees a rally of 4 to 5% in the near term. So I think the data looks positive at the current levels. There is excessive pessimism that is happening at the current levels. Nifty is holding 10,800 levels, and as mentioned in the show, Nifty has formed an inverse head and shoulder pattern on the chart front. So I think all the data are now supportive for a rally towards the levels of 11,200. The first initial hurdle is at 11,000, where the highest open interest is built up on the call side. Once that starts getting unwinding, we will see a quick rally towards the levels of 11,200, which is the next crucial and resistance zone for the index. Once that is taken out decisively, 11,200 on a closing basis, expect Nifty to rally towards the levels of 11,500 to 11,600 kind of a zone. So even in the near term, the data looks positive from the current day. Even on a positional basis, one can definitely look to long index at the current levels with a stop loss of 10,800 on a downside for target of 11,200. That is the first target, and if that is crossed decisively on the upside, we can see even rally towards the levels of 11,600 kind of a zone. Coming back to the expiry point of view, I initiate a bull call spread on the Nifty index. Since 11,000 call has the highest open interest build up, I'm expecting expiry to be around those levels, 11,000 kind of a zone. So one can buy a 10,900 call at the current level and sell a 11,000 call on the upside. Basically the strategy deploys a bullish view on the index, and I'm expecting expiry towards the levels of 11,000 kind of a zone. So one can initiate this strategy at the current levels. The strategy is trading at a debit spread of 25, and one can expect a reward of 60 to 75 on the upside, which is the maximum reward on the upside. The downside risk stands at 25 rupees, which is the debit spread you are paying for the strategy. So the view on Nifty still stands positive. Similarly, the view for Bank Nifty also stands positive, but I think Bank Nifty needs to cross 27,300 on the upside. Once that is crossed decisively and we close above that, then expect a sharp rally in Bank Nifty towards the levels of 27,800 and 28,000 eventually. So overall view for both the index stands positive for the current expiry and even for the September series. We are poised for a rally on the upside in the near term, and the view stands for both the index on the positive side. So for Nifty, my strategy would be a bull call spread, and for Bank Nifty only buy about 27,300 with a stop loss of 27,100 for targets of 27,600 to 27,700 on the upside.
All right. So, well, Kunal has already elaborated quite comprehensively as to why he's, employing a bull call spread on the index. But to give you a very quick idea what that is, a bull call spread is employed when one expects a moderate up move in a security. In this strategy, a call option of a certain strike is purchased. In this case, Kunal is purchasing the 10,900 call, and a higher strike is simultaneously sold. And again, in this case, it is the selling of the 11,000 call. But let's talk about stocks then that are looking interesting in today's day of trade. Ashish, I'll come back to you. What's looking good in terms of buying or selling?
Yes, so I think if you look at ICICI Pru is one stock I've been recommending on your shows consistently, and I think that is one stock which is making continuously a 52-week high with a lot of OI addition. So I think here one can initiate a long. 420 would be my trading stop loss. 450 is a short-term target one can expect in ICICI Pru. Dabur again is one stock which I've been consistently recommending. Strong pattern, strong OI addition, and good rollovers in September series. So I think at current levels it's a buy. 440 would be my trading stop loss. 462 is a short-term target one can expect in Dabur. And if you look at Divi's Lab is one stock in the pharma basket which is trading at a 4-week high. And if you look at last 3 trading sessions, there is a strong build-up of position. Although in today's trading session there is some amount of nervousness, but I think this should be used as an opportunity to create long. 1620 is a stop loss. On upside, 1700 is a short-term target one can expect in Divi's Lab. And one call option which I'm liking is of Bharat Electronics Limited, BEL. Stock has formed a strong inverted head and shoulder on the weekly charts with a very strong Y addition being witnessed from 100 to 104, 105 area. So here one can initiate a long, keep 4 as in stop loss in this call option. On upside, I'm expecting this call option to hit 11, 12 target in next 2 to 3 trading sessions.
Okay, BEL is quite interesting because yesterday we also saw some bit of long build-up. Remember on Tuesday when the markets fell 2%, this was a stock which managed to close marginally in the positive. It didn't fall too much actually with the market. So those are some individual stock ideas coming from Ashish. Kunal, what about you? What are you recommending in trade?
As I mentioned, the view still stands positive on the index. I think for the first, my pick would be L&T. We have seen some kind of fresh put writing happening at L&T 1300 put strike, which is now a very strong base for the stock in the near term. So as long as 1300 is not breached on the downside, expect a rally towards the levels of 1360 to 1380 kind of a zone, which is the resistance level for the stock on the upside. So at the current levels, one can definitely look to long on L&T with a stop loss of 1300 for targets of 1360 to 1380 on the upside. My second pick would be Cummins India. See, overall the stock has been definitely in a downtrend and we have seen continuous selling pressure coming on the upside. But if you talk about the last 2 to 3 weeks, we have seen the stock bouncing from the support of 555. Now this is a very crucial junction for the stock. If that is breached, then definitely further downside is there. But at the current level, the risk reward looks very favorable on the upside, and one can definitely look to buy at the current levels with a stop loss of 555 for targets of 575 to 580 on the upside, which could be coming in the near term. So overall, the stock definitely remains in a downtrend, but we can expect some kind of a relief rally into the stock where it has trying to form a base formation around the levels of 555 kind of a zone. So Cummins India would be my second pick. Already the oscillators are in the oversold region, and we can see some counter rally coming into the stock towards the levels of 580 kind of a zone. So definitely Cummins India is an attractive buy at the current levels. One can buy with a stop loss of 555 for targets of 575 to 580 on the upside.
All right, let's move on and talk about a few stocks which are moving largely on account of news. I'm going to start off with ONGC. Of course, we all know about the fire at its Navi Mumbai unit. But that said, well, the company has made certain clarifications, and because of those clarifications, we are seeing a gain of nearly 8% in intraday basis, currently trading near days highs, back at around 128 rupees per share. But it's not so important about the intraday as much as about what it has been doing over the past few days. So we have seen gains, and with today's gains, it has not only recovered, the recent losses it has seen, but it's actually been advancing. So on a 1 month basis, it's back to square one largely, if I can say it. Well, albeit it is a decline of around 2%. But on a 3 month basis, there has been weakness. It's down 25%. What do we do with this one? Ashish, I come to you. How would you address ONGC?
So I think in an immediate short term, yes, some pullback could more be seen towards 133, 134 area. But I think I'll use this opportunity if someone is on the long side to reduce long exposure rather than taking aggressive bet at current levels. So I think use this opportunity towards 133, 134 to reduce your long positions.
Okay, so Ashish is recommending to reduce long positions on this pullback rally that you've seen on ONGC, and the producer also tells me this is the biggest gain that we've seen for this counter since June 2014. Okay, that's ONGC for you, but the next counter is LIC Housing, which has been trading weak, and in today's session we've seen both price as well as open interest action. Look at that, 21% higher OI build-up coming up for LIC. The stock's down 5% today, but it's been trading in the negative territory for the last 3 sessions. Kunal, on the charts, if somebody is already holding short positions here, what would be the target on LIC Housing on the downside?
Overall, if I talk about the stock, now the stock is trading at a crucial junction of 385, 380 kind of a zone, which is now a crucial support for the stock. So at the current levels, definitely the stock is weak, and we have seen continuous selling pressure coming into the stock from the upside. So I think somebody who is even holding the stock, I think hold with a stop loss of 380. If that is breached on a closing basis, then I think all long should be exited from those levels. We can see further downside even towards the levels of 350, 340 kind of a zone on the downside. Overall, since the stock is trading at a very crucial support juncture, I would say no need to initiate any fresh trade at the current levels. Let the stock react from the support levels. If the support is held in the near term, then definitely we can expect some rally coming into the near term. But at the current level, for any new fresh buying, avoid the stock. But anybody who is holding the stock, keep a stop loss of 380 on the downside.
Okay, and moving on to MCX, it's perhaps a reasonably tougher stock to trade, considering that it is susceptible to a lot of news flow. And for now, of course, while there has been a little bit of an arrest to MCX's fall, well, it's trending at around 856. It's back to the levels where it was maybe last week. So around there you have it, and of course we're looking at an open interest increase of as much as 13.5%. Again, Ashish, this is, as I've mentioned, a stock which will be largely influenced by the news flow here. But if you purely go by technicals and your observations and futures and options, what do you make of it?
So first of all, there was a strong rally which we witnessed from 22nd August to almost 4th September. From there, the stock moved from 820 to almost 960, and now back to those levels. So I think here it should consolidate. I don't see any major activity getting built up into the stock currently, although build-up is quite high. But I think in terms of price action, stock is going to trade sideways. I don't expect a stock to breach 820, nor do I expect a stock to eventually cross 865, 870 in a immediate hurry. So I think it's going to be range bound in next couple of few trading sessions.
Okay, that's MCX for you. Trading, it's recovered a bit from the lower levels, but still sitting with cuts about 1.5%. All right, we're getting a lot of your queries, so we'll start addressing them. On YouTube, the first query comes in from the handle called F&O Student. He's suggesting that he has sold a couple of calls of NIT Tech at a premium of 13, and the strike which he sold is 1540. The price hardly moves according to him, maybe because of low liquidity. He wants to know what strategy should he deploy now for this this position. Ashish, I'm going to come back to you. So he's written 1540 call strike of NIT Tech at a premium of 13. The stock's currently at about 1433. What would you advise him to do?
So I think here generally this stock option is very illiquid in nature, and although since he has sold, I think what he should keep in mind is that there is some kind of corporate action which I believe is taking place, and I think till the stock is below 1470, you can continue holding on to this call options which you have written. But once the stock crosses 1470, that's the time you need to exit this call writing position.
Yeah, it's interesting. I remember when we started the series, the futures were trading at a deep discount of 10%, I think 130 rupees, which is now being bridged.
Right.
Okay, we'll move on and talk about, a view on Infosys. It's an interesting one. We have Ujjwala More, pardon me. We need a view on Infosys. Now, the interesting thing about Infosys, of course, is that it's a defensive bet, which is why it's been playing out. It's been doing well. It's trading at lifetime highs yet again, at least around then. Open interest up as much as 5%, so there has been some addition in open interest towards longs. The question is, where do we go from here? Do remember, this is one of the outperformers as far as the index is concerned, not only the Nifty IT index, but Nifty 50 as well. And it's advanced on a year-to-date basis too. Ashish, an interesting move from Infosys. A lot of interest also gathering in Infosys of late. How would you address this one?
So we are quite positive on Infosys. In fact, we have been recommending consistently long since 740 odd zone, and I think here also at current levels also I think the stock is in a very strong uptrend. 815 would be my trading stop loss for any long positions in Infosys. On upside, 865, 860 is a very short-term target I'm expecting in Infosys.
Okay, that's Infy for you. Before we proceed, I just want to mark the Nifty Metals Index. It staged a good recovery today. Remember, it's beaten down. This index is up 3%. You've got constituents like Coal India, Nalco, NMDC. All of them are registering very strong gains of between 3 to 7% respectively. Vedanta and Tata Steel, even the steel stocks, Tata Steel, JSPL, JSW, all of them are seeing good amount of gains. All right, I'm going to take the next query on Canara Bank, and this one comes in from Krishna. He sold the Canara Bank October futures at 201. Okay, it's October and not September futures, so if possible we can pull up that as well. The stock, by the way, has touched its 52-week low. Kunal, October futures of Canara Bank sold at 201. What would you advise him to do, considering the momentum has been on the downside, especially for these PSU banks, and Canara Bank being one of the anchor banks? When the news of consolidation came about, there was heavy shorting which came in for this counter.
See, definitely, even looking at the long-term charts, Canara Bank has breached the support of 210, which was a crucial support for the stock on a long-term chart basis. Definitely, the stock is in a weak trend, but I think at the current levels where the stock is, one should look for levels of on the downside, 180 kind of a zone, 185 kind of a zone. Probably there is a zone where we can see some kind of buying coming into the stock. At the current levels, definitely the structure looks very weak. No position at the current levels, I would say. If anybody is holding the position, then one can look to exit on bounces towards the levels of 200, 205 kind of a zone. But at the current level, the stock is quite volatile and has breached the crucial support of 210. So definitely the trend is on the downside in the near term. The stock can even test levels of 185 to 180, where there could be some kind of buying even coming into the stock. So overall volatility is likely to be high into the stock in the near term. So my advice would be avoid at the current levels, and if holding, then hold it with a stop loss of 180 on the downside.
Okay. A query on the Bank Nifty, 26,900 put. Venkat Sai has bought that put and paid a premium of 40 for today's expiry. Where do we go, and any suggestions? Can he pull that expiry up? It's currently at 31.4, so he's making a little bit of a loss. What would you do, Ashish? What would your suggestion be?
I would advise him to exit this put options because our view is positive, and as I mentioned, Nifty, I'm expecting a good rally. So obviously Bank Nifty is going to contribute. Maybe Nifty might outperform, but definitely in this up move, Bank Nifty is also going to see a uptrend. So it's better to exit this put options, and I think this is a good area where one can look for this exit.
Okay, that's Bank Nifty for you. The next one is on Nifty, and this query comes in from Gaurav Chaudhary. He's asking, for today's expiry, can he look to sell the 10,950 call and the 10,800 put today. What would you advise, Ashish, considering you're expecting the markets to recover by about 100 to 150 points?
Yeah, so as I mentioned, my view would be to be on the long side of the index. So rather I would suggest to buy a vanilla 10,950 call option to play this up move.
All right. Well, I'm not sure we have any more queries, so I think we could take a check on the markets. Navneet, anything new that's standing out?
Yep, Agam, and I think it's the day today belongs to the PSU stocks. If you look at the top 8 or 10 F&O gainers for the day, all of them are PSU stocks. ONGC up about 7.5%. Coal India is seeing strong gains. NTPC, oil marketing companies, IOC, HPCL, BPCL, all of them are up about between 5 to 6%. And of course, as we highlighted, the metals are rebounding. So be it ferrous or non-ferrous, Nalco also seeing gains of about 4%. BHEL also, by the way, is seeing strong gains about 4%. So Ashish, before we wrap the show, actually, any PSU where you would recommend taking any position considering the strong move today?
Yeah, so BEL would be my pick. I think BEL, I'm expecting the stock to see 117, 18 area, and for that I've recommended a 105 call option in BL. That would be my preferred bet in the entire PSU.
Okay, and Kunal, HDFC is quite weak. That stock's down about 2%, and ICICI Bank is also seeing some weakness. Any trade that you would advise here?
I think definitely on the index, the view still stands positive. So even considering HDFC or ICICI Bank, I'm looking for a good upside of 3 to 4% coming into both the stock in the near term. So my advice would be to stay long, and even if HDFC is down by 1.5% on the downside, I think it's a good opportunity to build fresh new long positions and look for an upside of 3 to 4% in the near term.
Okay, there you have it, guys. We've run out of time on the show, so I'm going to take a moment to thank both our experts, Ashish and Kunal, for joining us and taking us through their views and solving some of your queries. For more updates on the F&O space, you can also check our website out, bloombergqueen.com, specifically the futures and options pages.
With that, it's a wrap on this edition of the F&O Show. Thanks a lot for watching. Stay tuned to Bloomberg Quint for more news and updates.